Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thanks for having me.
Love having you on. And it's you were just priming me with there's a structural shift happening in macro. What is happening?
Yeah, I mean, well, basically, the Fed during the last FOMC meeting, I think, told you that they're done hiking rates. And they're done hiking rates because, one, they're worried about the risks of, continuing to hike and, the kind of financial stability concerns that might come along with that. But more importantly, we're seeing softening in the data, right? Whether it's employment, inflation, some of the sentiment surveys, and not only domestically, but abroad as well. You've got, Europe slowing down pretty aggressively now. China continuing to slow down. I mean, we have a Chinese inflation print tonight that, is most likely going to be a little soft. And, if you think about like oil as a barometer for, global growth and sort of, the industrial complex, et cetera, it's starting to trade incredibly weak right now. We're at $76 a barrel on WTI crude. Brent just broke $80 a barrel. Doesn't seem like a global economy that's about to rip and have crazy inflation anymore.
We're in the 70 handle in oil.
Yeah, correct.
Yeah.
And this is with a whole geopolitical situation happening in the Middle East.
And you think is that driven by like declining production and stuff? Is that the issue? Is that probably
it's mainly a function of declining demand?
That's what I mean. Right, declining demand. But so I don't mean production of oil. I mean of other stuff in the economy that needs oil. So declining demand, yeah.
I mean, you have like the SPR, bid level that is around here.
Sorry, I didn't mean to interrupt.
No,
continue.
No,
WTI was one of the examples.
It's just a market indicator right now telling you that stuff is soft. And what you've had happen in fixed income, is a broad rally, including the back end. You've had a flattening of the yield curve, right? So you got a double whammy with like supply from Treasury refunding last week, but rates are starting to rally in the front end, in the back end. You're starting to price in more cut activity. The wages side of things, even though you have like UAW, et cetera, like I think the 3-month run rate on like wage growth in the US is like sub 3%, right? And so you're just in a situation where it looks like your goals of, tame inflation and full employment is kind of like within reach, and you have like, some financial stability concerns as well. And so kind of seems like you're getting a huge sea shift in terms of like how market participants are thinking about, central bankers, their response functions, and the income, like the upcoming data as well. And so, I think a lot of the forecasters and researchers, that I've been talking to, they're expecting a continuation of the slowdown, right? If you look at things like credit card spending data, right? Like the delinquencies are going up for the most sensitive groups, right? Same thing with the auto stuff as well. And it's like, if you think about it, somebody gets into a leverage loop where they, have a high credit card balance that they can't really service and high interest rates. And so you're starting to see that kind of part of the economy, or that sort of segment of the population start to really feel pain. And so that's going to lead to, slowdown in
less
spending.
Yeah.
And, there's like a whole crisis in freight happening right now, like tons of like trucking companies doing like layoffs and stuff. That's impacting, all sorts of things from banking to like how, people's jobs, et cetera. And so there's just lots of like anecdotal bits and pieces of evidence that suggest that, the weakness is going to continue and, perhaps even accelerate. The counter to that is as rates move lower, people are going to, want to buy homes again and stuff. And you've actually seen that. So the 30-year mortgage rate this week dropped 25 basis points. So the largest drop we've had in like 3 months.
Wow.
But you know what happened? A subsequent increase in mortgage applications, the highest we've had since June. And so there's like a push-pull of like, when people start to overreact to some of this, softening data and rates start to drop further, that is stimulative, and that does cause like things to come back. So it's gonna be kind of like a swing of sorts, back and forth. But high level, it seems like we're making good progress on the prices.
Last week, was there not a higher for longer? Were they talking tough? But
they weren't. They want it all.
Yeah.
They're just like it's really tough.
So you think it probably isn't higher for longer right now?
No, it is.
Or
It is.
It's stayed higher. For
it is
longer,
higher for
but it's
longer,
not
but-
raised
but-
even
but-
higher from here at the moment.
Correct. The idea that they would go again after this, like in my head, is done.
Yeah.
And in the FOMC pricing, I think the Jan meeting has another 4 basis points of hikes,
Which is
priced in.
basically not a hike, right?
a hike.
Yeah, and then I saw. I think now the market is pricing by the spring is cuts
100 basis
that's
points
the
by the
expectation.
Jan FOMC meeting, next
next year. So yeah,
So there's a lot of cuts. But when you think about where we're coming from, like we're 525 to 550, like cutting 100 basis
You're still
points
pretty
from
high.
there, you're still pretty high.
right. Which is what the
Right.
Fed wants, and the scheme,
Yeah.
that is higher for longer.
Correct.
Yeah.
But there are some other things. I mean, you're starting to see more commercial real estate deals go through, and those valuations and those marks start to feed through. So there's just a lot of things that could potentially go wrong as
Yeah.
well. And so, I think path of least resistance is now lower in terms of yields. That should be constructive for risk assets and things like Bitcoin.
Yeah, it's been an interesting ride with Bitcoin. We've basically
Absolutely.
been in the range since we've straight up mostly bled higher.
Yeah.
We're pretty
That's because-
firmly now in the high 34s or even the mid 35s.
Yeah.
Since the gamma squeeze we talked about now 2 or even 3 weeks ago, I'm forgetting, I think maybe 2 weeks ago, it's just been higher lows the whole time. So, but still struggling to break above 36. Do we have another leg higher in us before ETF announcement? Do you
This
think?
kind of price action tells you that they're dip buyers. This kind of price action tells you that the pain trade is higher.
Yeah.
I don't think there's been participation from the hedge fund community in a meaningful way, and most folks are under allocated. Even the crypto native folks that you talk to that are crazy bullish. All the people that I'm in chats with and communicating with, like nobody has had this on like, oh, I'm gung ho crazy bullish Bitcoin.
Yeah.
I'm gonna max allocate to it. And the issue is everybody gets benchmarked to it, right? It's the most liquid thing in
point.
crypto, and it's up over 110% with a great sharp, and it's got further upside because there's an impending catalyst.
Yeah.
And so everybody that has this tool in their toolkit from a macro standpoint, from a crypto standpoint, is just looking at this and is underperforming this thing. Every ticket goes higher. And so that's why this thing has like such a strong bid on dips.
Yeah.
And secondly, like this is an asset like whose value is determined by where people are willing to transact it, right? And like there's sellers for miners, etc. But high level, when something gets to a value point or critical mass in terms of like ideas, right? Like Bitcoin's value is now 35,000 to tons of people that trade money around. And the market makers, determine where prices are set at the margin and stuff. But once something has value, right, it's tough to take that away. And God forbid, we're back in a bull market and these equities and stuff. And so like people are feeling good about owning risk assets.
Yeah, it feels like you combine it with the changing in the rates environment. You've got a Bitcoin halving next year. Like it's
like the perfect
You've got the
storm.
catalysts, which could
People
cause
don't own
inflows,
it. People
right?
don't own it.
And not enough people own it. It does. It feels strong right now.
It
And
feels strong. And like
I
normally,
mean,
like
really
when you
stronger than it basically has since we started this podcast.
well, this is what we've talked about. There's a convexity to the thought, right?
Right.
And so it like once you get to that critical mass, right? It just starts to feed on itself.
Yeah.
The positive price action is a positive feedback loop into the asset itself because your thesis gets rationalized. You're like, oh my God, this is actually working. It's getting validated. Brings other people in, and so we've talked about this. And so that's kind of, I think, where you're at, and it's a wonderful place to be. And normally, like when you feel really great about something and like it's gone your way, you're supposed to sell something, like take profits, etc. But like clearly, everybody that's felt good about this thing took some profit, and all of a sudden, it's like all those profits that you took, like you're underwater on them. And so this is what happens when an asset performs so well, especially late into the year where you have like performance,
coming
effects.
up. Yeah.
Right? It's like you're a hedge fund manager, you're a venture guy, you're a crypto business, anything, in crypto gets benchmarked to this. And
Yeah.
so it just gets tough. And every tick higher is a
That's what
tick
we
of
saw. Remember
underperformance.
last year we ended the year bleakly, right?
Yeah.
FTX collapsed like mid or early November. we bled down all the way down. I think we started 23 at about 16.5. But that also helped because then it was everyone saying, oh,
Base
fresh
effects, too.
performance, base effect, low base. And we lifted off through March. After around the SVB collapse,
Yep.
we hit 30K. So it almost doubled in a couple months
And
earlier
God
this year.
forbid we had the ETF when we had the banking crisis.
Oh, man.
God, I mean,
You talk about money flying out of the banks going into
right
money
into-
market funds.
yeah.
A lot of it would have ended up in a Bitcoin ETF. I think that's right.
I think a ton.
Yeah.
A ton of.
It's going to be an exciting time.
Yes.
I'm happy we've got Bimnet Abibi here to talk with us about it. And, of course, we'll continue to talk about it. Bimnet.
Absolutely. One of these days, I'd like to go off on just the BOJ.
Okay, we'll do a Bank of Japan episode.
Yeah.
Bimnet Abibi from Galaxy Trading, my friend. Thank you so much.
Have a good one.